Well, India's new age tech story is no longer just a startup narrative. It's a structural investment thesis. And ICICI Securities has just dropped what may be the most comprehensive mapping of India's digital economy yet. 5,000 hours of research, 20 plus subsegments, 170 plus companies. And the headline finding? Well, India is at the same GDP per capita inflection that triggered China's digital consumption explosion between 2006 and 2012. Joining us to decode what this means for investors is Abhishek Banerjee, lead analyst and the architect of this landmark report. Abhishek, great to have you today on ET Now. So 5,000 hours you've invested into this research report. Tell me, what was the one big headline finding according to you?
Okay, first off, thank you for having me here. And see, the 5,000 hours is not just my time, right? So there are 4 more people who are co-authors on the report. It is all our combined time. So yes, as a house, we have put in that 5,000 hours of research. And just to clarify, right, this is not a report which tries to, give a buy-sell recommendation, right? It is more about kind of aggregating all the information in one place so that people like me, analysts and maybe investors also, have one place to go to when they need information. Now that being said, I think your question on what is the biggest takeaway is you have to stay invested in the tech ecosystem, right? So if you look from say the 2000s to now, the total return for Nasdaq, right, which is a much more, much more widely tracked metric, index, and there the returns are almost 5x of that of S&P 500. Right, so that is the kind of alpha which can be created by staying invested in the tech ecosystem. And while there will be some decades when the growth is slightly less, the returns are slightly less, but over the last 5 decades, there was only one decade where, say, Nasdaq underperformed S&P, and that was the decade of 2000s when there was a dot-com bubble. That is it. So, and even during that time, there were outliers. Amazon did extremely well. Apple did extremely well during that period. So, the point is, always stay invested in tech, new age tech, and if you can, really pick the winners or the then you can have outsized returns even then.
But at this point, Abhishek, I think it's very important to also distinguish what tech by definition means now, as opposed to how tech as we knew it even I would say a decade back. And it's not IT services which the traditional investors are used to thinking about. So how would you define tech in today's day and age? Because tech is something that touches pretty much every aspect of our lives.
Right. So see, when we are talking about tech, we are talking about the tech which consumers, users are interacting with on a daily basis. Mostly it's B2C. In some cases it's also B2B, but that B that it is catering to is not a big enterprise, right? It is maybe a smaller SME, if you're talking about B2B e-commerce. So that's one. Second is the frequency of interactions is much higher. It at least has to be, once or twice a month, right, for it to really be tech. Because only in that case can you track the user behavior or the expenditure habits of the person you are kind of trying to look at. So those aspects kind of go in into defining tech as of today, because a large part of it is analyzing the user whom you are trying to maximize revenues from. So without that, you can't really call it new age tech.
And where does IT services now fit into the scheme of things?
So I don't cover IT services,
sure.
So I shouldn't classify, but I would say it's now more mature tech part of the ecosystem.
Okay, so new age tech, and very interestingly in your report, you've drawn in the China 2006 to 2012, parallel, and that seems to be the centerpiece of your thesis, even though you did give a lovely example of Nasdaq as well. What's the most critical condition you think India needs to meet to try and fully replicate that China trajectory?
See, okay, that's a very wide question, but let us just look at the China example, right? 2006 to 2012, the GDP per capita of in China in 2006 was around the $1,800 mark, which is where we are today, right? So from that angle, you can always draw a parallel. But of course, the value of the dollar has come down from that day to today. So even if you adjust for that, maybe $2,000 per capita or $2,100 per capita is the equivalent number. But then, in order for the China kind of consumption story to play through, you also have to have conducive global macroeconomics, which doesn't seem to be the case. But thankfully, on the other hand, you have a scenario where digital adoption in India is actually faster than China at a similar scale. So yeah, these are the pulls and pushes. Of course, the government has been doing a lot of reforms on which have aided tech adoption. That should continue, and obviously we also have to be a little lucky in terms of the macroeconomics kind of falling in our way. So those headwinds have to turn into tailwinds for a China-like story to play out. But frankly, whatever estimates that you kind of see us building in, that doesn't build a direct parallel to China. Because even if it's half of that growth rate, you still have a very strong outcome. But yes, there is definitely a change in user behavior when you near that $2,000 GDP per capita number.
Okay. Very interestingly, in your report, Sarvam AI gets a mention alongside, of course, Reliance and Adani's, $200 billion infrastructure pledge as well. Is sovereign AI, you think, a genuine moat or just policy signaling right now when it comes to India?
No. So, see, it is definitely a moat, because the kind of the investments that need to be made into AI, it is going to be very difficult for private players today to make those kind of investments. You can just see the difference in the market caps of the top Indian companies vis-a-vis, their US counterparts, right? So, and then you don't know if there is light at the end of the tunnel, right? A lot of those investments may actually go to zero. So that money has to be such that the risk appetite has to be that much to be able to invest maybe $5, $10, or $50 billion with the risk of it going to zero. And I think the only entity which can do that is the government. But not to kind of undermine the private sectors as well, we have seen Reliance and Adani also pledge money into the data center ecosystem, where there is slightly better visibility of returns. So I think both together have to kind of contribute to really building up this new sector.
But you don't see large LLM models come out of India just yet. You think the play is going to be more on the data center side?
As of now, it seems that way. Though there is, given our multitude of languages that we speak, there is definitely room for adapting some of those LLMs more for India, and I think that will be the first goal to kind of get to. But yeah, as of now, it doesn't look like a large LLM is being developed here.
I want to talk about the various subsegments that you've mentioned in your report, and let's talk about QCOM, because that's how we first got to know tech, and that changed our lives. Now, that's already grown about almost 100% on a year-on-year basis. Is this a structural shift now in how India is going to shop, eat, etc.?
100%. 100%. So, see a couple of things. If you see the growth of quick commerce, first, when we talk about it's a quasi-retail model, right? And in even retail, you would have seen that growth is very high when there is room for store expansion, which is what has been happening over the last couple of years in QC. But the adoption from the consumer side has also been phenomenal, and the largest part of the market is Delhi NCR for QC, right? Almost 30% plus of the market is just Delhi NCR. Why is that, right? I think it has got a lot to do with the climatic conditions where we live, and also the facts like
accessibility,
pollution, accessibility, all of it has to play a role. Now, given India's urban infrastructure is still catching up, I think the kind of price points at which we are being able to offer quick commerce because of our lower cost of labor, etc., and the fantastic backend that all these people have kind of built, you will see the adoption here only increase.
Interesting. But I also want to talk about B2B commerce, and where is it that you think that's going to head in the next few years? Because as of now, it's under 2% digital penetration that we're looking at. So is there room to grow more there too?
Absolutely. So see, in terms of B2B e-commerce, obviously we are too far away to really compare ourselves with China, because China is the manufacturer of the world, massive
it's
supplier base.
Economy,
it's a different size. But even in India, there is room for pricing or the fulfillment to the smaller buyers to improve, and that is exactly where all these B2B players are kind of coming in. They are not only giving you the right price, they are also controlling the fulfillment experience for you, so that if you have a critical order that you need to deliver within a certain amount of time, you don't get delayed because your supplies didn't come. And I think there is a huge room for that.
I also want to talk about the mobility market, because when you talk about tech, those are the touch points that we had first in our lives. E-com, food delivery apps, and then of course mobility as well. That market is also seeing now players like, say, a Rapido, who are kind of disrupting the duopoly that an Uber, Ola, earlier shared. What's going on with that model? And what will really work with the Indian consumer?
So I think mobility is one space where the disruption has been way more than anybody could have anticipated, and full marks to Rapido for that. They seem to understand value better than most
existing
other players. But yeah, so what has happened there is from a per transaction take rate basis, which is how it is monetized globally. Rapido brought in the model of a subscription fee, right? And given in mobility, right, the entire end-to-end experience is actually controlled by your cabbie, right? It was actually easy for, say, kind of Rapido to be able to replicate the same quality of experience that an Uber or Ola can give if the cabbie is happy. And that's why you have actually seen a very sharp ramp up even in ONDC when it comes to mobility, right? So mobility, I think right now we are at a juncture where profitability has taken a hit, though growth still does not seem to be a concern. It's still in the high teens. But I think going ahead, what we'll need to contend with is to augment the supply side, because the payouts for the drivers and the cab owners is no longer the same as what it used to be, right? So there has to be some way that the supply side can be augmented. One way is probably to kind of allow private cars to also ply with the aggregators. Obviously, that can unlock a massive market and a lot of value. But obviously, that also has its regulatory challenges. So we need to watch how the government decides to handle it.
But tell me, these two segments, and that's both QCom, food delivery, as well as mobility, they're very price sensitive. Do you think at some point, basis the dynamics of the economy, high fuel prices, are they likely to see some amount of disruption, even if in the near term?
See, price sensitivity is a question of the audience that you are trying to, your customer base rather. right? So, and Indians are generally price sensitive, right? But that being said, the impact of these macro factors on something like mobility is likely to be more than what it is in the case of food delivery or quick commerce. Food delivery, for example, is a sector where 90% of the revenues comes from the top 18% of the user base, right? So those people are generally much more immune to some price increases, right? Plus, the cost of fuel is a minute fraction of the overall AOV that the customer is paying. So with a 5% odd increase in AOV, all those costs can be easily kind of taken care of. Similarly for QC, right? It's a play on convenience. It's the first time, say, some of the players manage to extract extra premium from the customers, saying that, okay, pay me 20 rupees extra because I'll deliver the order within 15 minutes, which our grocery won't be able to do, local grocery. So those are relatively more, immune segments because of the customer base that they cater to.
Understood. I also want to talk about, gaming, because that's one sector which has seen the, regulatory roadblock, so to speak. I mean, it went from $6 billion to $1 billion in just, one move alone by the government after the RMG ban. Scope to resurrect, or do you think it's impaired for good?
Obviously, this sector has a lot of societal implications for the government as well, right? So we need to be kind of aware of that, right? But that being said, there might be some subsegments which are not really as addictive, or which are not really gambling per se, right? Could the government reconsider those segments?
Like? Give me some examples.
Maybe some part of fantasy gaming, right? It's a large segment globally, right? So could that be reconsidered by the government? Some of the experts that we spoke to seem to think that yes, they probably could, but I don't think the government has come out and said anything on that aspect. But one more thing which I think even the government is looking at very closely is that when you kind of ban something like which is a completely soft product delivered to your mobile, the propensity of people kind of doing that illegally increases, right? And we have seen those illegal apps kind of proliferating. So that is also something I'm sure that the government has on its radar.
You know what's intriguing about your report, Abhishek, is that you haven't made any stock recommendations. Is that deliberate?
Yes, absolutely. So, see, couple of things. One, when we kind of try to publish something in the form of a book, it can, go to a wider audience. So there are some compliance requirements. But one more thing which I was kind of thinking that often when we try to put a buy or sell recommendation, we ourselves kind of get biased. In order to kind of prove our point of buy or sell, we might tilt one way or the other. So by avoiding that, we have tried to be as objective as possible. It is kind of a repository of data for anybody who needs, and we are happy to be the providers.
I'm obviously not going to ask you for a stock reco, but if you had to say the next NVIDIA or an Anthropic, if it were to come out of India, which of the tech sub-segments you think are sort of geared up for that kind of growth?
Okay, so in terms of value creation, honestly, I can't say something with, I can't see a space where that kind of value creation can happen. But that being said, the kind of valuations that these AI startups are kind of getting today, I don't know if it is sustainable as well, right? And there could be a long argument, right? We have seen some of the IPO plans globally and the numbers of $1 trillion market cap on day one. It's scary, right? But that being said, I think there is enough and more room for growth. QC, we have only seen the revenue line grow. There is still going to be the entire profit improvement story which will play out. food delivery, I often hear, clients and all saying a 20%, revenue CAGR. But the fact is, we are still 20 years behind where China is today. And if you look at India's underlying, demographic trends, then this 20% growth rate can continue for the next decade, which means a profit growth of 25%. That itself is a 10-bagger. So there can be enough and more value creation, though I don't know if there can be something which can become 100x in the next 2 years, 3 years, like a lot of these AI companies have done. But I don't have visibility on that.
That's, of course, exponential growth.
Yes.
You get tired counting the number of zeros. But on the policy side, if you were to say that the government had to do something or some single regulatory move which could really open up many other sub-segments when it comes to India's tech stack, where do you think that could come from, or what could the government perhaps do?
See, a couple of areas which come to mind. First is on the point of where exactly FDI is allowed, right? That is a gray area which keeps coming, and we have seen a lot of cases where there have been accusations and counter accusations on that. So clarity on that would be very helpful, and also on the labor laws, right? Because that is obviously there are state variations, and if the government can do something to kind of regularize that across the country, that will also be very helpful.
I have to talk about edtech, even though it seems like a failed story, at least from the poster boys, because that itself in your report, as you've quoted, is projecting a 25% CAGR to that $29 billion by 2030 mark that you have. Post the pandemic hangover and Byju's collapse, what's the actual sort of, driving force behind rebuilding this entire space? Because it's definitely a need gap that one can't, ignore or shy away from.
So, see, one of the main challenging factors which edtech had to encounter was there were some players who were making unrealistic promises and using business development as a tool for growth, right? Without looking at actual cash collected. Now that has changed, right? So all investors are now focused more on the profitability part, and that has led to a healthier behavior change as far as edtech is concerned. And when I talk about this 25% growth, that is also to do with the various, so with time, we all realize that the need to stay updated, even when you are on a job, has only gone up, right? And there are new technologies coming, every second year. So there will be, more and more need to kind of do stopgap, adjustments to your skill sets, right? Which is one place where, edtech is definitely going. And even in terms of, the more traditional edtech, say JEE preparation, those kind of places, there is always a very large market which is still kind of untapped, right? Because of our inability to pay. Yes, unorganized. So that unorganized to organized move will also happen, and there will be newer price points created where even people who used to only have to resort to self-study can also use some of the digital tools to help themselves, right? Which would not be possible in a physical setup because of the cost of that physical setup. So I think there you will see growth, and I think edtech, I mean, it has been really under the hammer for a long time, but I think there are some players who are definitely taking that in the right spirit, and they are kind of trying to come out stronger.
So Abhishek, if I were to ask you that, what is that one theme, so to speak, within edtech? If some promoter were to come to you, or some techie or software engineer saying that, I want to cash in on the India tech story, what business idea should I go with? What is that one theme that you would ask him within the entire consumption gamut to focus on? Where do you think lies the biggest opportunity right now?
So, okay. I think it lies with, what you call parallel learning, right? Post a person having a job, whatever new skills they need to kind of keep themselves updated. That is one area where people have the ability to pay. And the AOVs can go up a lot, right? So that is there. But that being said, just business ideas don't make for great outcomes, right? It is execution. You can ask any of these promoters. At any given point of time, 5 more people were working on the same idea as they were.
And only 2 survived.
And only 1 or 2 survived. So, so that is anyway the secret sauce for all success here.
But of course, there are other emerging sectors like pet care, for instance. Extremely high margin businesses, the unorganized to organized play currently at function. And there too, people are not price sensitive, right? Or for that matter, children or kids, that entire subsegment as well is getting organized. Now, of course, you have only one listed player within that. There are these sub-segments, BPC, fashion retail. You talked about India's per capita and something that you're betting on. Women joining workforce, that's another theme that could work out. Any of these sectors you think is a good opportunity?
No, so see, there are multiple opportunities where one could build a very profitable 35-40% EBITDA margin business with a scale of 100-200 crores. Multiple, but the challenge is scalability, right? While it is a great place for entrepreneurs to go, but will that really interest investors is the question. Because if you're looking at a public listing, you're probably eyeing at least $500 million odd valuation. For that, you have to have at least
the size and the numbers.
The size and the numbers. So while it is extremely interesting and it will be a large part of the India story for sure, but as a sell-side analyst covering listed equities, I haven't really done too much work on it because I think the scale is not there yet.
Okay, Abhishek, so much insight. Thank you so much for your time today. Great chatting with you.
Thank you so much. Thanks.